All right. So welcome to Game Plan Sunday. Today is September 13. We're going to take a look at what occurred in the markets over the past week and what we noticed coming down the pipeline this week, and use all that information to put together a game plan to make some money in the markets this week. So last week was very interesting. We got, a really nice, drawback in the markets, which is pretty good. What I'm going to do is actually go down the list here on the website here at Jackboyz.com, so you can follow along if you like. But a lot of the information I'm posting on the website throughout the week. You guys can also, this is the news feed that we're on right now, just so you don't, if guys are not familiar with the website. I'm on the news feed tab here. And so all this information is popping up in the news feed. Also, what's coming up here is the events calendar, which is also down here. And so there's quite a few things that we can go over here. There's a lot of economic data pulled over in the markets this week. So let's just go down the timeline here and take a look at those things real quick. So we got the job openings and labor turnover. And as you see that, I highlighted some of the key points in here, so you guys can see what's going on. We actually post the feed from the economic data right here on the site as well, so you get it straight from the source. I'm showing you guys exactly what's being printed, what the market is looking at. This is what the market is looking at when this stuff comes out. So basically, just said that the number of job openings increased to 6.6 million. Also, hires decreased to 5.8 million in July. I mean, to me, this is pretty much a non-factor. One of the things that they posted in here was there were more people that's quitting their jobs, right? It said more workers quit their jobs in the retail as well as professional and business services industries, likely because of fears of exposure to COVID-19 and problems with childcare. Now, in economics, we try to figure out the causality of the phenomena that we're witnessing. And so what they're saying is that they believe that people are quitting their jobs because of COVID or childcare. But I'm under the belief that people were actually quitting their jobs, not only because of those things, but also because of the stimulus that they were given. Although we don't have stimulus running right now, and I think that this is really going to play out really bad in the markets if they don't cook up another stimulus anytime soon, which it doesn't look like they're going to. After listening to Ted Cruz talk about it, it doesn't look like they're anywhere close to dropping this stimulus package. So there's going to be more pain to come. And the citizens, the people are just, living. I don't even care about economics or finance or nothing like that. They're just living. They're like, mice in a rat race, and we're like the overlords. Okay, so we can see the whole thing, what's happening. But a lot of people are quitting their jobs, is what you're saying. So there are, some jobs that's opening. But I think a lot of these job openings are from jobs that were previously lost. And I don't think that these job openings even make up for what was lost. If we come up here to the unemployment numbers that were released as well, we see that, of course, they constantly revise these numbers and everything. We see that they said that last week was unchanged. So 884,000 unchanged from the previous week. The previous week level was revised up by 3,000. So it was 881,000 jobs, unemployed people that filed for unemployment the week prior. They revised it up to 884,000. That's the numbers that we got last week. They're probably more than likely going to revise these numbers when we get the data coming out this week. So you still have an elevated amount of people that are still unemployed. Lots of people. That's 884,000 that filed last week. So this is just giving us insight on the economy itself. It's a lot of hype, a lot of news is hyping people up to try to keep the confidence. But when you take a look at from an economic perspective, you can really see the weakness. This is how we was able to call the recession and everything. We've seen a lot of weakness in here. So we're still seeing weakness. Also here we had the PPI numbers, and this is the producer price indexes. So basically we saw a little bit of inflation here, basically, from the producers, So we got the numbers for that, and it was basically showing inflationary. That means, prices of things are going up. So if it goes up for the producers, then it's going to go up for consumers, obviously. They're going to pass the cost on to you guys, right? To us. Then this is another feed that I caught here this past week as well. PPP loans exhausted and small businesses forced to lay off. Stimulus not quite stimulating, right? And then also black business owners are getting wrecked. Goldman Sachs survey of 10K businesses. This is my little commentary that I had here, but you can quickly just read here the little highlights that they had in here. And this is a report that came from Goldman Sachs. Let me switch over to red. Goldman Sachs is basically saying that that stimulus money that was given out, this shit is gone. All right. Boom. Nearly 90% of small business owners have exhausted their funding from that PPP. And to expect more layoffs, okay, in the coming months, because that money's running out. And that money was used for these companies to try to keep them up, is to keep the fugazi continuing to go. They had this fake confidence that, hey, we're hiring. Like I said, we saw that saying that they're hiring more people. Well, I mean, all of this is really coming from the money, the stimulus that they had. But when that money runs out, then what? So the government is creating these zombie companies where it means they can't, sustain on their own. They have to have the government stimulus, the printing of money to just stay in business, but they're not producing any value, right? So they're keeping these jobs up. In fact, I was at the, it was funny. I was thinking about it. I was just at the gold mine, and it's state owned, so it's government. And the thing is, when I was at the gold mine, what's good, Zay? I see. When I was at the gold mine, they had the gold mine portion shut down, but everything else was open. And so they had employees that were working there, although the business isn't making any money. There's nobody who can go in, you pay and make any money. But yet you're paying people that's sitting here just making money, sitting down, doing nothing, absolutely nothing. Right. So, I mean, this is just asinine. You're propping up all this stuff, keeping people, making money, but yet you're not producing no value in the world. That can't last and sustain forever. Not at all. Although that wasn't a private entity, that was a state owned, but still same principle, Also, we see here that says that more layoffs coming here. 32% of loan recipients have already been forced to lay off employees or cut wages, while 36% of small business owners will be forced to do so without financial relief from Congress by the end of September. We still don't have no financial relief. There's still no stimulus. As I was just mentioning, we're not even close to that. I believe that this is going to play out in the risk that we're going to see coming up in the next few weeks, because there's no stimulus. How are they going to keep this bubble going, right? Small business owners, this is what they said. They said they felt left behind. Only 7% feel like okay? Only 7%, right? So over 90% of the people feel like they've been left behind, right? But only 7% feel like the federal elected officials prioritize policy issues impacting small businesses over big business, while 99% say it is important to have a comprehensive federal agenda to help small business recover from the economic hardship caused by COVID-19. In fact, what we've been seeing is that, government intervention has only propped up big businesses. So this doesn't help small businesses, and we need to have the small businesses. This is what makes up the economy. Small businesses are getting crushed, right? But the big boys, they're getting it. They're getting the money, they're getting the contracts, right? You got the Amazons, the Apples, the Teslas, whoever, right? And so the people that's getting the worst is black business owners, okay? And again, this is a report for you guys who are just tuning in. This is a report from Goldman Sachs, okay? It said black business owners face a tougher road to recovery. 43% of black small business owners, compared with 30% overall, say their business cash reserves will be depleted by year's end if Congress does not act in September. This is funny. When I hear these things, it's kind of like a cry for help. When they release these articles, they're trying to, get Congress, force Congress to go ahead and move into this stimulus thing. I say, hey, man, people are going to get hurt, and it's going to be politicized is what I'm saying. It's going to be politicized, and somebody's going to get the blame. So eventually, I mean, these guys, the Democrats and Republicans, they're going to have to come together and put something together, because the pain, once the pain starts to go down, I mean, you guys saw, we'll pull up the charts back even when the markets crashed. I mean, even before then, with the Fed's intervention, raising rates, when the Feds did their last interest rate raise, the stock market puked, they had a fit. So Jerome Powell was like, okay, all right, we're not going to do nothing else no more. And then the stock market started to come back, started recovering. And then you had COVID that just killed it. Right. So then they went from not acting at all to just throwing everything at the bubble. Right. And so that's why we getting this so-called bounce back. All right. And then we had the CPI numbers that came out. So we looked at the PPI numbers. For you guys that don't understand, I know this is all on the website. So if you're not on the website, go to WallstreetJackboyz.com, subscribe, and check out the news feed. This is straight from the source itself. PPIs for producers, CPIs for consumers, CPI. These are the two numbers. In fact, when you're in the events calendar, it lets you know like a brief summary of what these data releases are before they even come out, so you can know what's going on. But so we got the CPI numbers that came out also. So again, we had a lot of economic data that pulled back last week. And if you see, this is showing the inflation according to the Feds, how they actually measure it through the CPI numbers. Excuse me. And then it said basically interest increased by 0.4% in August. Okay. What else? They were saying that, let's see, the monthly increases in the secondly adjusted all items index was broad-based, a sharp rise in the used car and trucks index. So used cars, so people buying used cars, nothing wrong with that. The index for gasoline, shelter, recreation, and household furnishing and operations also contributed. So these are the other contributing factors to what's causing the prices of things to increase. So these are the prices are increasing because of the spending here. All right. And so when we talk about the inflation, again, when people get more money, what do they naturally do? They spend more money. It's just when I study economics, again, I've been studying for quite some time now. And then Austrian economics is that, it's a study of human action. It's not about numbers and stuff. It's really about, human actions. Why? It's the causality. When I got my data science certification, my data science teacher was teaching us that there's two sets of data scientists. There's scientists that don't care about the why. They just want the numbers so they can formulate and forecast with the numbers. They don't care why the numbers are the way they are. Then you have another set of data scientists that actually want to know the causality, the causes of these data sets, and then they make their decisions based off of what they learn from that. And so it's pretty much like mainstream economics is kind of like the one I just mentioned. The first one, they just see the numbers and then they're going to make decisions off that. The Austrians is all about the causality. What's the cause of these things? And so taking a look at this stuff, when people get more money, they spend more money because they haven't had it. And this is like a causality situation. So when the Feds are printing money and they have provided stimulus, quite naturally, people are going to spend more money. But that's the reason why they design the programs. They design the programs to get people spending money. This is supposed to be to stimulate the economy. Stimulus, that's where you get the term from. So anyhow, after the crash here, you guys see, the CPI, the price of things going down, and then now they're up here. But remember, the Feds just targeted their interest rates higher than 2%. So the Feds want to get to 2%. And this is what we was talking about before. The inflation rates, this is where they measure that. The 2% is where they want to get to. They're not even close, right? And instead, they can't even hit the 2%, according to this data set. And they can't even hit this. So they said, well, maybe we need to aim even higher, which is at the 2.5%. And then again, if you guys are here 2 weeks ago, Game Plan Sunday, you saw I went over this illustration before. But basically, the Fed saying, if we can get up to this 2.5, maybe we should aim that way to create inflation so that we can hit this 2% target. That's their goal, okay? So if that's what they want to do, right, this is the Fed's objective, and we'll find out more of their agenda here this week. But as you guys can see in the calendar here coming up this week. But inflation kills the purchasing power, your purchasing power in dollars, storing dollar savings, money in your mattress, money in a shoebox, you're losing money. And so, you had to work the capital, right? We had this last article that I just wrote here. Make sure you check it out and read it. And it teaches you and tells you why this is the case and what you need to do to actually get ahead of it. And we'll go over this also in the markets, what was happening, why the markets continue to go up, although the economy is going down, because you got to work the cash. You got to work the capital. Cash is trash. And so, and then along with that, bonds is just, bonds is crazy right now. So bonds is a bubble that is probably going to pop, and it would be drastic if that happens. But there's no yield in bonds. And so the alternative is to just keep risk on. So you see, people are still buying the stocks. Also, the alternative to that, it will be gold, right? The metals. Also, this is interesting too, highlighted here that 3 tech unicorn IPO set to launch. Snowflake's high anticipated IPO could net the company $2.7 billion in proceeds, with $500 million coming in private placement with Salesforce Ventures and Berkshire Hathaway. So Warren Buffett has been piling up money into this IPO. For you guys interested in that, SNOW, Snow is going to be the ticker, and they're going to be launching this week. Let me see if I got more details on this in here. Okay, yep, I do. Here we go. All right, the cloud data. It's a cloud data company is telling you. They plan to sell 28 million shares for between $75 and $85 each. That's the price target, with the midpoint price value in Snowflake at about $22.3 billion, actually. This is an IPO. And then there's two other Bay Area tech companies, Sumo Logic and JFrog, updated their terms as well. Sumo Logic plans to sell 14.8 million shares, well, between $17 and $21 per share, while JFrog aims to offer 8 million shares at $33 to $37 a piece. Its existing investors put in another 3.6 million shares on the block. At the midpoint of their respective price ranges, Sumo Logic would be worth nearly $1.9 billion. JFrog would have a $3 billion market value. So this is going to be hot news this week while the markets figure out what it's going to do, because the markets is in a really interesting point. But you got, eyes that'll be on, hot stuff like this, I should say, excuse me. People trying to get in, especially on this snow company, Snowflake. So that's going to be one to watch this week. Just want to give you guys heads up on that. Also, this is some news this week. Also, I'll put in here, Netflix tripping. Haven't watched the show, seen a lot of, talk about it all over the web. But here you go, here, Netflix, they had some show, what is it called? Let's see. I know it's trending all over Twitter. I've seen people talking about it. People are really upset about this. Cuties, here you go. Some show called Cuties. I haven't watched it and I don't plan on watching it, but it looks like, their stock has suffered from whatever this release was, the slack coming from that. And then Disney also. And so, you guys know I don't really watch much TV, but I was wondering, it's really not many shows out these days. And what do you guys do? Like, after you watch everything, what else is there for people to do? I don't really know. I don't think they're actually outputting the amount of shows to satisfy people's appetite. If, a lot of people are at home, I guess not working and consuming all these movies and stuff. But, I went to look on my Xbox with the wife and, try to spend some time with the family and watch a couple of movies. And the selections are very, few, In fact, I watched, what is it called? I can't remember. It was some kind of gang banging show, Tax Collector. That was a good one. A lot of the other ones I saw, they were all right, nothing really blockbuster to me. So anyway, just wondering where that's headed at. And I also saw Netflix CEO was saying, I guess people were expecting Netflix to buy these cinemas, buy these movie theater chains, what have you. And I saw the CEO saying they're not going to do that. And so I think people were a little upset about that as well. I think people were expecting Netflix to buy these, these movie theaters that they're not making money. They're wasting resources. It's a waste of resources. You're not making money. In fact, when I go to the movie theaters, when I used to go to the movie theaters with my wife, a really nice movie theater here, they serve you food in the theater and everything. They got a nice seats, really nice. When we go there, man, there's nobody there. It'd be, the latest drop movies just be me and my wife with the theater to ourselves. And I'm like, yeah, see, baby, I just bought the whole movie, shut it all down just for you and me, baby. I still got the pimping in me, right? You know what I mean? So anyway, these companies, they're not making money. And I think Netflix see that as a great risk. Why are you going to take on this brick and mortar? You can't, pack the place, right? But that doesn't mean in the future that they won't, because again, Netflix, they're filming their own movies now. You also got Amazon Prime filming their own movies. So to me, it does kind of make sense that they should actually, they will actually buy these things, these movie chains and start to, run their movies through them, which I think will be great. But it's that big if we ever get back to normal, right? Will we ever get back to normal where people will be going to movie theaters in the way that they are? I think eventually we will. But, again, we have to see that. That's the risk. That's the unknown that we don't know about. All right. So taking a look here, I'm going to just go to the events tab so we can see what's coming up the pipeline this week. All right, man, you guys are awfully quiet this evening. You guys doing all right? Had a good time? Good time this weekend? Nice rest? All right. So here's the events calendar here. This is what's on the pipeline coming up this week. Let's see what's important here. We got the import and export data that's coming out on Tuesday. And then we also got the FOMC meeting again. So, this is going to be, with the markets, because they're going to be expecting more stimulus for Powell. And I think that everybody pretty much expects, Powell to continue doing what he's doing now. Like he said, he's not even thinking about, raising interest rates, anything like that, because that would be, that would just kill everything. So they're definitely not going to do that. We'll just get, again, more stimulus, more, manipulation of the interest rates. And then you have the unemployment numbers we got coming out This Thursday, as far as I know. In fact, for you guys on the website, wherever you are on the website, you can go to the search bar and you can search things right here on the website. And again, I really want you guys to start using the website, pick it apart, let me know what we can improve on and what would you like to see and things like that so we can make it better. But anyhow, I'm gonna go here and let's actually type in the yield curve. So you can do things like this, type it in, hit search. And we're gonna pull up our nice handy dandy yield curve chart, which shows up here in the feed. And when you click on this chart here, this is give you guys a little glimpse of what's happening with the yields, the bonds, and things like that. Right here on the website, it's embedded. You know, I man the data, of course. But you guys see the yield curve in here. Well, this is the yield spreads, and so we got the short term versus the long term. Short term will be with the Fed's control down here, the 3 months, and then the long terms, the markets. That's the blue, and so you see the Feds control this one, okay? And they drop it, they cut it all the way down, and they're trying to keep it down. They're suppressing it. This is artificially, you know, their hand that's working to keep this thing down low. Because if it pops up, then the markets, the whole economy is going to be in trouble. You know, your interest rate's going to be going up. But when they keep this stuff low like this, they're trying to encourage people to, you know, to take out more debt, take on more debt, right? I think I've even seen they're trying to manipulate rules of people 401k so people can cash out early. Anything to keep the bubble going, which is, you know, take on more debt. Again, we have people they don't even have jobs. How are they going to service the debt? We got people that's got debt way up to their head. Student loans is out of this world, you know. And so these are some of the factors that we were talking about before COVID even hit. And but at the same time, you still have, you know, a distorted economy. So it's a little harder to call it because so many distortions in here, and it's a rationality that's playing out as well. And that's what makes it tricky. It's not like the data can make people do anything. People can behave irrationally if they want to. We have that freedom. And so, you know, like you have people buying, you know, bankrupt stocks, which is out, you know, it's asinine, but that's what people do, you know, irrational. So you have this housing market. There's no risk in the housing market. Housing market is looking pretty good, actually. So because you have people that's, you know, going and trying to get these houses in certain places. OK, so you got to also understand real estate market is divided up in different places. I was just seeing how in Manhattan and New York, they have over 15,000, you know, vacant apartments. People are leaving. You know, it's an exodus in New York. People are leaving out of New York, going to other places. And in fact, you're looking at California right now, we got like wildfires. I think they're man-made fires. I don't know what kind of fires they are, but you know, these are definitely not natural fires. And the fires are just ravaging, you know, cities. It's just engulfing everything. I've seen, you know, a couple of films of, you know, the sky is just red. It looks like some kind of Nuketown map off of Call of Duty. So I was say, hey, I don't know what to tell people, but, you know, get the hell up out of there, you know. And so I think that you have people that's, you know, leaving these places and they're looking for places to settle. And, you know, they're buying homes as they're exiting this place. And so I think that the numbers, the data that we're seeing itself, again, remember I told you earlier how some data scientists don't care about why, and some of them do care about why. And so same thing with the economists, we're trying to figure out the cause. And I think that, you know, it's not that the data is lying. It's just that when the story that people tell about the data is where the lies can come from or the distortions come from. And so anyway, we're just trying to figure out the why. Why is the housing market boom? Why is people buying these houses? I think, you know, people are migrating from certain places. They got some cash, for whoever had the cash, the security families, and they're buying houses, you know. So I see that as well. But yeah, this is the yield curve chart. I just want to show you guys this. You guys remember when we called the recession itself way back in this article, right? When we had predicted the recession because of this yield curve here, this chart, the most accurate chart for that, right? So I really don't use it much because what we had called came into fruition, right? And so we called it, came into fruition, so I haven't used it much, but I just want to remind you guys that it's here and that if you're doing any analysis on your own, that you can use this as a tool. It's a free tool, free resource. I built this because when I was studying, learning about this stuff, I could not find a yield curve chart. That was just crazy to me. And in my training, we use Bloomberg terminals, which you don't have access to a Bloomberg terminal. Those terminals are, you know, close to like $30,000 a year. So most people can't even afford those things. That's the tools that the institutional investors in the banks, they use the Bloomberg terminal. So anyway, That's with that here on the website. Let's actually go over to the charts real quick. So let's see if I can actually do this. I'm trying to do as fast as possible, but I know that sometimes the power that's being used, it will, buffer here on the site. When we're looking at the futures market right now, let me switch over to yellow, and the futures market is looking pretty good right now. I'll show you. And so when I'm looking at my side charts here, I sum it all up right here. This little area right here, it just sums it all up for me in one glimpse. It just makes it easy for me to see, what I need to see. Right up in here, S&P 500, NASDAQ, Russell, the Dow, gold, and all that. And so I'm looking at it's color-coded as green like this is letting me know that things are positive. The Dow is, the NASDAQ up 100 points and the Dow up 125 points. This normally will bleed over into the next day. When you have this amount of positivity and optimism in the markets, normally the next day is going to be a green day normally. But when I take a look at the charts here, I can't help but to notice, if you guys remember the last time that we met, I was telling you guys that 50 moving average is going to be critical. It's a psychological level. Let me just try to zoom in here just a little more, stretch it out so you can see it. All right. So on my chart, this pink line here, this line here is the 50 moving average, 50 days. And what happened is we saw the S&P fall straight to that 50. And what did it do? It held, okay? It held and it tried to bounce up, but it bounced up into the 21 moving average. It bounced right here into the 20 or the 21. And it shot back down right here to the 50, has not breached. And so it didn't come all the way back up to this 20, all right? Neither the 9, but it's right here. This is where it's at right now, okay? So I think that, this 50 moving average, okay, which is pretty much right here, the market has to hold this, because if it don't, then we're going to go further, you're going to go lower. Now, the interesting thing is if we hold this zone, this may set us up to go into another rally. But I can definitely tell you that the sentiment is very, very cautious right now. On Wall Street, people are scared right now, especially October. We talked about sell in May and go away. That didn't work. In May, there was a time people was piling up. But, September and October, historically is that zone where the markets do people sell out just on that level. But we have a lot of political risk right now, and then there's some risks that we haven't seen yet. We don't really know. We got this COVID situation right now, and a lot of people are I think that the markets are trying to be optimistic about COVID. We got AstraZeneca, we have Moderna, we have all these biotech companies, right? And they're constantly juicing the markets up with some news about trials and things like that. And I guess people are optimistic about this whole vaccine situation. Me, myself, I'm not, people may call me a conspiracist. I'm just a person that uses my brain and I can logically deduce certain things. And I think that although they may be optimistic about a potential vaccine, you also have run the risk of enforcing people to take this so-called vaccine that doesn't even exist yet, right? I mean, you have people that are talking about this thing as if it exists, I'm still waiting for the person with the HIV vaccine, right? I mean, there's a virus that pops up, it's killing a lot of people in the 80s, and we still don't have a vaccine for it, right? And so I don't know why is it that people feel like there's going to be a vaccine this year or next year, they can work so fast to get one out. And normally it takes years for them to even come up with vaccines. But for some odd reason, the government, everybody's involved. They're pouring in a lot of money into these companies so that they can develop this so-called vaccine. And the thing is with these vaccines, man, they never work perfectly. People will die, from them experimenting on those vaccines and, side effects. You don't know until after you deploy this thing. And so although you may get rid of COVID, you may kill your liver or kill your kidneys, right? So to me, the optimism is comical to me. It really is. And I know people want to be optimistic, and there's nothing wrong with that. But I just think that this is the hype that's going to probably try to keep the markets up this week, because we're going to have, talks of, I guess, AstraZeneca, and then they're talking about possibly having a vaccine up by the end of 2020. Now, this is talk, right? To me, talk is cheap, right? But they may pull something off that keeps people's confidence up. So I think that any positive movement may come from the biotech side here. But just taking a look at the markets, at the charts, I think the charts, that just looking at a technical perspective, we're in trouble according to the charts. So let's take a look at the NASDAQ, who's been pulling this market all the way up. Dustin says that tech about to get smashed again this week, I say. You might be right, Dustin. But you know, I was talking about that 50 moving average. Psychologically, look at it. Look at the price. Halted. It's got that Gandalf halt, you know, thou shalt not pass from Lord of the Rings, right? And so we see price is trying to stabilize up here, right? So price stabilize here, confidence will stay in. You know, you'll get people that start buying thinking that they're buying the dip. If confidence break, I mean, we're meaning that the price breaks this 50, confidence also follows. I posted this in the chat room. If you guys not in the chat room with us, we're in the chat room live 24/7. So make sure you guys get on the website. So anyhow, but yeah, if this breaks, confidence goes with that. You know, you can see a whole lot of panic selling. All right, so that's the NASDAQ. Let's take a look at the Russell. Same thing here. Now the Russell was actually weaker than everything else. We've already, you know, known about this for a little while here. And the Russell had this little, you know, double top, you know, play here. It got halted right here. It never actually hit its previous highs, right? It was, you know, it's always the weaker portion of the sector. And it came down to its 100. So this is the floor on this one here, right? And it's holding up here at the 100. And so it did breach this 50, but it's down here at the 100. So you see the 100 and 200, they're pretty close together. So this is going to be the level here on the Russell. But I say that the Russell's probably a better buy than the other things. They're overpriced. The Apple and big names broke through the support on hourly, not a sign of confidence for bulls. That's right. And so, yeah, and that's another thing is that, you know, these sectors, they, you know, the way that they weight these sectors, you have certain names that are bigger in the sectors, like Apple, for instance. And we could take a look at Apple. Here we go. So a lot of these sectors are heavily weighted in Apple, but, you know, with the new sector rotation in here, Apple is not the number one weighting in there anymore. You know, a part of this, the split and all this stuff actually made them not so heavily weighted. So the sector itself isn't going to be as strongly dependent on Apple as it was in the past. And this just started now, right? But as you saw, you can see the price here on Apple snap to that 50. And the confidence is trying to hold up in here to 50. So I don't think that we're at a short level. I don't think we need a short right now, because what's tricky is to see if this price is going to hold as 50. And so this is Apple. Let's also take a look at Amazon. Let's take a look at the big boys real quick. Same thing here, the 50, right? That 50, you know, that 50 is holding. Except on Amazon, it's starting to leak. Now, Amazon breaches, so will the NASDAQ and everything else coming with it. So Amazon, that's another big one that was, you know, pretty much the same thing. And Tesla, let's talk about Tesla a little bit here, because for you guys that don't know, Tesla was supposed to have been taken up into the S&P 500. They're supposed to add Tesla to the S&P 500. And last week, Tesla got snubbed. They did not get to enter to the S&P 500, which is very interesting. Because I did see some people that was, you know, saying how, I know OG Rob, he was talking about how, you know, he just gave up on his fundamental training and, you know, his background in finance, because he's like, man, this stock just keep on defying everything that we learned in finance, right? And let's just look at it, right? A company hasn't been profitable in forever, except for this year, it finally turned profitable. But, you know, they burned through so much cash. It is ridiculous. And to me, I think that, you know, Elon Musk is a very popular guy. You know, he's a celebrity. You know, he's pretty, you know, he's more popular than Hollywood stars, and he's on Twitter. If you guys don't like Trump on Twitter, follow Elon Musk. I mean, this guy is nuts on Twitter, right? He's like Trump times 2. And he's staying some beef, right, on Twitter. But he's in a lot of things. And so for me, I think that he himself, Elon Musk, I think he's a very, you know, intelligent guy, but I think he's too divided. He's doing too many different ventures. And In the Tesla space itself, you have a lot of competition coming up in the electrical vehicle sector. And these guys, their cars are better. I mean, they are better than Tesla, you know? And so, but if Elon Musk was to focus solely on Tesla, I think that Tesla would, you know, probably be even more, you know, even better, more efficient than everything else. One of their issues is trying to get the costs down on Teslas, which they still haven't quite managed to do, and also to ramp up the production. And Elon Musk is a very talented individual, but he's also a very talented salesman. And often, anybody remember in the past, you know, Elon, he oversells and underdelivers quite often. And so a lot of things that we see in here is hype, you know. Again, we told people Tesla's definitely not worth this. They're going to burn through a lot of investor cash. They're going to need to raise more because that's what it takes for them to do what they're doing. So again, the stock market is like a giant GoFundMe, right? If you guys take the course at WallstreetJackboyz.com, I make it simple. I make you really understand how this thing works. It's like a giant GoFundMe account, right? You know, these companies, they're looking to raise capital so they can do what they do. And Tesla's burned through a lot of cash, and there's no return that gets back to its investors. And they put that money back, you know, and blowing through a lot of it. But anyhow, you know, we see, you know, everybody's trying to get in for this, you know, before the split. And I was like, why, right? Well, everybody who got in the split, you know, they're losing their asses right now, right? And you never want to buy at the highs. Remember, you don't want to chase the highs. We don't chase the highs, right? You know, you want to make sure that this thing gets some pain. Like back here was a much better level when the stock was looking like shit. That's when you want to buy it, when they had that pain in there, right? And Tesla still got some more pain to go, right? But just like the other stocks we just saw, it's holding up that 50 quite nicely, right? Holding up that 50, coming up to the 9, meeting that resistance. It's probably come back down some more, all right? Tesla to me would be more attractive around this level. In fact, even better at this level. I would definitely be very much inclined to get in at this level. But I wanted to say this because I don't know if you guys have seen any of the other cars that are out there, but there's a car, in fact, NIO. This is the stock here. You know, I posted this is on the website as well. If you want to go on the fundamentals group, you can see it. On this NIO company, I mean, they got the automated cars. I mean, this is all they do. You know, Tesla and Elon Musk, the guy's doing space. He's doing, you know, ground transportation. He's doing flamethrowers. He's doing so many different things. You know, he just came from Germany last week. I mean, he's doing a lot. He's got the solar. I mean, you're only one person. You feel me? Like you got to delegate a lot of this stuff, but he's doing a whole lot. And Tesla's like a technology company, but at the same time, this company here, NIO, their cars are phenomenal. I don't know if you guys have seen them or not, but they do the same thing that Tesla does, but even better. I mean, they got the artificial intelligence built into the freaking car, like a little robot in the car that's moving around, looking at you. You don't have to touch a button in their cars, you know. But this company here is only $17.97, you know. And this company here is, you know, again, same thing as Tesla. There's another one called, I can't think of the name of it. It's XPENG, I think it's XPEV. XPENG, yeah. And they just launched. This is just the IPO they just launched. And I saw the profile on this guy when they before the IPO. This guy is American trained. He went back to China to start this company. I mean, his car is remarkable, you know. And the thing is, these are Chinese companies, and their technology is better than Tesla, and their prices is way cheaper. You know, you're getting nice cars under $50,000 with better features, which is crazy. And then there's this other company called Nikola. And Nikola, this one here, okay, another nice one here. This company here, the CEO, he's pretty open guy. And, you know, this guy here, he's going through a lot of crap from a hit job. You know, he's basically saying there was a hit job on his company from, I guess, some publication company, and he's out defending, everything that was going on with the SEC. It's all in the hands of the SEC. But, you know, they just had a merger with GM. So people don't really know about that. They had a merger with GM this past week, and then the stock had popped up like this. Then the hit job came, boom, shares are falling now, right? So they're trying to knock this company off. This company, they specialize in these, electric, vehicle, these trucks. And I think they're coming to the U.S. next year, which is real big news. And then their partnership with GM was just, really that's really going to help them out because they get access to a lot of resources they didn't have before. But as you see, the stock is coming down here as well. And, if this thing come down here to the the 200 moving average, then I think that this is a good buy zone for this one as well, So I just want to give you guys a heads up on some of those names there. I know I kind of went over on our time a little bit. I'll take a look at a couple of the names from you guys real quick, and then we'll bring the session to a close. Just drop in the stock ticker that you want to take a look at, and then we'll run a quick analysis, and then we'll bring it to a close. If you guys got any questions, let us know. SPAQ. All right. So this company here, I don't know much about it, but they had a nice run up to 21. It looks like they're making a bounce back here. Spartan Energy Acquisition, look like an energy company here. And so what I would do is just take from that high to this low here. And it looks like we have a target up here around $18 on this particular company. So again, the trend is intact. It looks bullish, right? And then we have a target up above right here. But also this 38.2 line, we can't ignore this. It is one of my least likely levels, but we've seen that it hit this level before in the past. It's a clear level of resistance, and we're still chopping up in here. So before you can take off, it's going to have to clear the 38.2. And if it clears this level, then you're looking at the 618 as a potential target. So that's how I feel about that. All right. And then Southern Company. Well, this is definitely looking bearish here. So, again, don't like the chart itself. Trend is down low. How I feel about it is pretty negative, Yeah, it's like a bear flag looking play in here, and it's continuing to chop down. I don't see it at a particular buy point. In fact, we got a rollover on the trend here. Got a squeeze popping in here, so it may trend up and down between this 50 moving average line here. If it cleared at 21, so even if it tries to rally, it's got to clear through. In fact, it's got to clear through the 100 for me to even be interested in it. It's got to clear this level. This is a hard level. This level, the 100, is a hard level, and then the next zone up will be the 200. But again, I would be more bearish on this one. All right. What else we got here? GCX. All right. Not familiar with this name here, but let's just take a look from this peak high to that low. That is a long way up. Let's see. Yeah, that's a long ways up. $115. GCX. What's actually do? All right, let's bring it in a little bit. All right. It's a pattern here that could break out like this, okay? We see the momentum is shifting up this way. Looking at the stochastics, momentum is shifting. And so that $115, that 61.8 target on this thing will be good. But if we zoom in just a little closer, I just want you to see the 21 moving average as a key level of resistance. So you guys can see here, we did not clear. We're back here again. So it needs to clear the 21 moving average for this to become the target. It's a Chinese stock. Okay. Yeah, I think, Chinese companies, I'm telling you right now, we talked about this last year. We talked about it this year. American companies can't F with Chinese companies. I'm telling you right now, don't let the hype fool. I just showed y'all Neo and XPENG, all these companies, that would give, like I said, I told my man, they would give Elon Musk a run for his money if they can compete here in the U.S., It's because they don't have access to the U.S. market. Think about it. If you can get a car better than Tesla for much cheaper than a Tesla, which one you going to buy? You're going to buy the cheaper car that's giving you better technology, better everything than the Tesla, right? So Elon is pretty much protected, because these companies, especially under Trump, he ain't going to even allow these Chinese companies to come over here and compete. So he doesn't have that level of competition. So competition is what brings prices down, and so if they have to sell those cars, Elon, that's his whole thing. He's trying to get prices down in a way that makes sense economically, not by force. Okay. So the competition will force those prices down, end up costing them a loss. FDX, and then I'll take a look at yours. Dustin, after we finish. All right. FedEx. I don't see anything that particular stands out to me on this one here. Let's just see. You know, stock is bullish, so I wouldn't bet against it. You know, my previous levels have breached through, right? Stock is still going up. You got earnings coming up, so just keep that in mind. It's an earnings play coming up, and depending on earnings will be, you know, would it take the direction of this company here? If they F up earnings, you'll see this thing get snapped back. If they deliver earnings, then, you know, they would do their thing. And earnings is this week, I believe, Tuesday. So this is an earnings play. I mean, again, if you get into it before earnings, then you're gambling. And I don't try to tell people how to spend their money, how to invest your money. Just understand that's what you're doing. Okay. So some people like gambling. If that's your thing, do what you do. I'm not giving you guys advice. I'm just letting you know that it's a gamble because we don't know how earnings is going to play out. And earnings can make or break you. It's more of a gamble, though. All right. And then KL, before we get into KL, let me actually cover gold real quick. What was that, Dustin? All right, cool. So let's just take a look at gold, the charts here on gold. Now, if you guys noticed this past week, right? If you notice that when stocks was going up, gold was going up. Let me know if you guys saw that. If you noticed that when stocks was going down, that gold was going down. Who noticed that? Anybody notice that? You know, see, back in the day, it used to be opposite, right? Back in the day, under normal market times, stock market goes up, gold goes down, gold goes up, stock market goes down. They played opposite. But now they're moving together. And this is very tricky, okay? It really is tricky because they're moving together. But what I did notice, okay, is that when the stock market was up, gold was up. But when the stock market was down, gold was slightly down. Did y'all notice how small the losses in gold were? All right. Look at this. Let me just try to make it bigger for you. Gold is playing more like a safety. Yeah, you're right. It is about the dollar, Dustin. But gold is moving real safe. If you see, this is the action from last week, right? Look how steady gold was last week. I mean, it really wasn't that. In fact, I think overall for the week, gold was slightly up, actually. Yeah. This is what it did, right? This is gold. Let me show you equities, right? All right, let's go back to equities. And equities had a steeper fall, right? You see, equities had a steeper fall. It fell worse, but they both fell together, if you notice that. So for me, let me go back to gold. All right, so because gold is moving more stable, and the fact that the feds are trying to create inflation and gold is the hedge for inflation, to me, the narrative fits more for gold here. And I believe that the stocks, again, the stocks are going up because, there's no yield in bonds, and otherwise, if the interest rates were higher, then the move in bonds would make more sense, but it's not. And so, investors just put money into equities. They're not holding dollars, right? They're not holding dollars. They got to put this money somewhere. But the smart money is still long gold because the smart money is counting on inflation to rear its ugly head with all this, the spending, all the stimulus that the government is doing. So I'm still long in gold. I wanted to show you guys this here. This 50 moving average, the same way that we saw with equities, it's still true here, right? And gold itself, it is squeezing, right? You can see it squeezing, and it's going to have a breakout to either direction. So it's going to have to make a move, probably by the end of this week. If not the end of this week, then next week. But I believe that if we get any more pain, I'm not too sure if gold is going to follow equities, depending on what kind of pain that we see. And I believe that, even if the market takes a significant drop in equities, we could see gold, decouple from that move, depending on what risk we see, right? So depending on, what kind of risk we see that will cause it to happen. But I'm still long on gold. We added some pieces last week. GOLD, still riding with you. And we can see here that the levels here are, pretty much holding true, right? This extension here, we're trying to clear this level here. We know it's a level. We've tested it several times. We even came up to the 786 last week and didn't quite clear, but we're still holding up on a 9, right? So we're still holding right up here in the 9. And so I'm willing to hold as long as we stay above the 50, which is right here, okay? And as you saw here, when it breached under this 50, this shook a lot of confidence out of players, only to rip back up. So I think, again, still holding here. I actually bought some more physical pieces. If you guys look on the gold and silver group, you'll see we have, brokers, whoever we're buying from and everything. If you got some, share it with the community. That'd be great. But I actually ordered some Perth Mint and got that here. But KL is another gold company here. Okay. And again, this is pretty much the same situation. We're held up right here at the 618, right? We're held up right here at the 618. You can see that right there. So price is chopping up here. And as long as it holds above the 50, I think that you're good, But if you, again, if we breach the 50, then, you may want to consider, exiting, your paper trades. But if you got physical, that's not a sign to get out of physical gold. But this stock here, Self Kirkland, is a good one. It's a nice one. I like playing this with gold as well. So it is in a squeeze here. We got some mixed signals. We have a strong up. We had a strong down. So I don't have like clarity on it like that. It is in a squeeze though. So we see the squeeze. But I think it's going to chop around. I think that, again, by the end of this week, then we'll get a decision in here in gold. And so gold goes up, so does Kirkland. Gold goes down, so does Kirkland. So that's how I'm playing that one, Dust. All right, cool. And again, make sure you guys check out the website here at wallstreetjackboyz.com. Check out all the features and amenities and benefits and tools. We have lots of tools that we get for free. This is the dashboard. Make sure you put a picture on. When you're on the website, please put a picture up so that people know who the hell they're looking at. And then put a little bio about yourself. You don't have to be, too descriptive, but just a little something here. This is, again, we're building community. So I want to thank you guys for helping us, grow Wall Street Jackboyz. Keep it active and keep it popping. It takes a lot of resources. I don't really think that people understand the amount of time that it takes to put into building something like what we built here. Even with the new courses and everything, if you guys are on the courses, just the video production that goes into it, and again, when I started Wall Street Jackboyz, I used to be live every week. Everybody but that was it was not efficient. It take up a lot of people's time. And here we basically went through video production to film courses. We figured out all the value that you can get consolidated into a short format so that you're not taking out, those webinars we used to do, the old website, 2-hour courses a piece. And on one end, you're like, oh, that's a lot of value. But on the other end, you could be like fatigued. After you do one class, you just tapped out, right? So we was able to figure out how to deliver all that value in shorter content. Basically, you can go in here and you can just go into the courses. Again, we got the quizzes and everything, but the amount of work that goes into filming, editing, and then the visuals that's like embedded in the screens and all that's a lot of work. I actually do all that myself, but it does take a good amount of work that goes into it. The functionality of the website itself, all the courses have been changed. That's right. All the courses. So again, if you're an old member, none of the old material is there anymore. Some people came and was doing a transitional phase, but now all that information is gone. We have quizzes in here now as well. Again, you can just jump into the quizzes, test your knowledge. If you know what you're doing, then you can pass the quizzes. You know, you get certifications and all that as well. See, start the quiz right here. All right, so let's start the quiz. You know, just want to encourage you guys to use the site. This is a tool. Got the light mode, dark mode, light switching and that. But yeah, as you can see, you can go into everything. You can see what's all in here. But that's just one portion of it. So again, we got the learning phase, and then you also have the social phase. And I want you guys to really start to you know, posting, you know, again, posting the things that you see, you hear, questions, communicating with other traders as well. And again, you could do all of that from right here on the side menu. Let's see here. Just show you guys this real quick. Let's go back to my profile here. It's got news bite dance rejected Microsoft. Oh, wow. That's interesting. I know China was saying that they don't want they don't want American company to buy their companies. So good heads up on that, Ron. Make sure to post that in the news feed again. And then again, if you know anybody that you think can benefit from Wall Street Jackboyz, right here on the website, all you got to do is go to email invites from your profile page. So from profile, go to email invites and drop in the emails of the people that you think could benefit from Wall Street Jackboyz. They'll get an invitation to join, and it's up to them to join once you drop in their email, drop in their name and their email here. And then the website will automatically populate a message in there for you. All you got to do is hit send invite. So yeah, drop as many emails and names in there, all your people. They get it from you to join Wall Street Jackboyz. Again, registration to the website is free. The training is not, but to enjoy. If you already trained, you know, again, we welcome everybody. If you already trained, you know what you're doing, you can still join and still enjoy the benefits. The chat room itself, again, we got the chat room in here. So make sure you guys join the chat room as well. For those that don't know, you can actually make this bigger. I like to carry it around with me down here at the bottom. And whenever somebody sends you a message, you hear the boom. I know a lot of people like to hear that little bloop when it pops up, because you know, oh, that's the message coming from the Jackboyz, right? And a lot of things I'm posting straight from, you know, from my my platform, what I'm looking at, what's popping, and everybody else as well, like Ron, John, Mark, and these guys are really active. And you can make it bigger as well. Just hit open a new tab, and you can just make this a big screen in the chat room for yourself. You can do side messages as well, communicate with your colleagues. You guys can do video calls as well. So if you go to individual's name, if you guys want to have a meeting, like right here on the site, you guys can have a meeting amongst each other if you want with the video calls and stuff like that. So it's right here on the site. So again, not going to take up too much of your time. Make sure you guys dig around and explore. There's lots to do here at WallStreetJackboyz.com. So with that being said, we'll bring the session to a close. I'll catch you guys in the markets this week. Peace.